we're going to look at why you should actually use the bank finance when you invest in property. And I'm joined this evening by Ekow Kwagwira, who's the founder and CEO at B Grand Holdings. Ekow, good evening, and thank you so much for joining us.
Good evening, Zama, and thank you for having me.
It's always a pleasure, Ekow. I think one of the first things, before we actually look at some of the reasons why you should use bank finance, perhaps first let's look broadly at how you should be looking at the way that you finance a property deal before we look at why specifically you should be looking at bank finance. Because I think sometimes people don't quite understand the benefits and perhaps the downside of how you should be looking at how a deal in itself is actually financed.
I think how people should be looking at bank financing, right? Because of it's two choices. You either use cash or you get a financier to fund your property or take out a home loan. And most important thing also to look at is what do you want to do in future. So that's where the finance deal comes into play, because with a finance deal, for example, if you buy the property for R1 million and you have to put in a 20% deposit, you will then be able to have excess cash so that you can invest it in other markets, whether shares or equity, or you can even do multiples of these deals. So that's the way people must look at it. They must actually understand, have the goal. They must identify where they want to go with this property that they want to buy, and then make a decision based on that. But the important thing is, what do you want to do in future?
Ekow, we should then look at why we should use bank finance. I think beyond why we should not use cash, what are some of the benefits of using bank finance? And later on, I want us to look at the creative ways that you can continue to access and re-access various funds from a financial institution by using your home loan as a vehicle.
Why do you need to use bank finance? One, you predominantly using somebody's money to make money, right? So you go in there and maximum, say you put down 20%. You buy a R1 million property, for example. The bank is going to give you that 800,000 rand. So you've used less of your money. You can do more with the excess cash that you have, and therefore you can be able to grow your financial portfolio better, right? The second thing is interest rate. For example, if the market turns down, right, and like the current market that we're in, if the market is down, what do? Your whole money is not tied in. So if you put R1 million in and you want to get out of this deal, you've got R1 million, and your money will decrease anyway because the prices are falling. So you've actually lost, which is to the extreme, but you've actually lost value on that R1 million. Whereas if you put in a 200,000 or 100,000 in that deal, you've got less skin in the game. So even though you feel the pressure, you wouldn't feel it as heavy as you've got a whole R1 million in the deal. So that, and also tax benefits. So even if you buy as a personal home to stay in, there's still tax benefits that you get like on your property if you do the finance way, the bank finance way. People like us, while we buy majority of our property for investment, we actually don't have to worry about the interest at all, because the borrowed money is not, interest on borrowed money is not taxable. So you get the tax deduction on that. And those are the beauty. So that's the thing that you need to look at. Now, if you buy the property, for example, with R1 million, and you come to realize that you need to do home improvement because you couldn't spot some renovations, or you couldn't pick up certain things because there was a couch somewhere and there was dumping on the ceiling and the rest, and you couldn't pick that up. Now you need the extra cash. Where are you going to get that extra cash from if you've tied all your money in? So if you use bank finance, you've got that leverage to be able to use some of the money that you have to renovate. In worst case scenario, in the best case scenario, You can even do refinancing, take out the equity in that property because you've got a bank financing you and you've got your credit record intact. You can do that. So those are the things that people should look at when they go the bank financing route. If you look at it from the cash side, my advice is always say it's to see that you might be tying up all your money into one asset, and you might be having, in future, you might have liquidity problems if you want to sell the property quickly and get out of the deal. There are also, of course, some benefits to buying a property cash, right? You're looking at it and say, but I don't have to pay the interest rate over a 20-year period. You must also know that you still pay for the legal fees. You don't have to pay for the bond registration and the rest. So basically, and of course, if you're buying for cash, you might even get a discount from the seller if it's an agent sale. And agents love you for buying cash because why? They know that you won't back out of the deal because you wouldn't be disqualified if you had to apply for a home loan. I would personally advocate that you go the bank financing route.